because then as you move forward now into your 40s, now is when you're going to be really focusing on, kicking up your savings a notch, maybe even reevaluate your budget again in your 40s. Because sometimes as we start to make more money and make more salary, we tend to spend more. I know one thing that I did that helped me in my life is in my 30s, after I paid off that credit card debt, I actually then paid off my school loans. And the one thing I did is after I paid off that $800 a month nut, I pretended I kept paying it. So I kept putting that money now into what I called my house fund. And then as I moved up and I was able to get pretty good bonuses, I would pretend those bonuses didn't exist. And I would take those bonuses and I'd put those into my house fund. And that was how I was able to buy my first home. And then as you move through and you have extra income, some other tricks out there is, for example, obviously you want to max your 401k up to the employer match, which could be 3 or 6%. And if you have an HSA, say you have a high deductible plan, you could have that HSA, believe it or not, that can be treated as almost a secondary retirement account because they cover healthcare costs and there's no tax on those withdrawals. Now, check with your individual state, because in some states, not California, where I live, unfortunately, but it's actually a tax deduction. But that varies by state. But regardless, it can be invested and it's up to, a couple $1,000s a year, depending on, your age. And that grows tax-free. So that is another wonderful tool to use.